Hi everyone, today let's take a quick look at US retail sales and the recent surge. Then we'll look at all the usual data and charts and this most recent touch of resistance. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So retail sales did a lot better than expectations, and we did see a market response from that, climbed 0.4%, while core measures jumped 0.7%, while industrial sectors did decrease by 0.3%, but that's being exacerbated by the Boeing strike. Boeing strike seems to be a little bit odd since that whole company continues to struggle, but that's besides the point. You can see this retail sales push up into this nice region here. Everything continues to look good. And we are seeing the US consumer continue to do well. Discretionary spending rose by 1%, which is tracking at a 3.3% growth over the third quarter. Again, sounds like a soft landing based on this. Of course, we have disruptions from Hurricane Milton, which is kind of poisoning the jobless data at least a little bit. But this continues to fuel those hopes of a soft landing or no landing scenario. But honestly, I think that's going to be more dependent on the jobless data than just consumer spending. Starting off with fear and greed, we did get back into overbought conditions here with extreme greed at a 75. That's just about as high as it gets. It can get into the 80s occasionally, but that's usually where markets top out. We've been talking about it for a while. We're in this consolidation period. We got here back on September 27th, and we're still here. Most of the indicators are in extreme greed, except for strength, which has moved down to regular greed. And then you can see volatility pulling back to neutral. The moving average also trending a little bit lower there. Safe haven demand as well as junk bond demand in extreme greed and greed. So nearly across the board, we're in extreme greed. Moving over to the AAII survey, we did see that step down a little bit, down to a 45 from a 49. Neutral was basically flat, but we're seeing those bears step back up. Last time we got here, we did see a little bit of a step down. We'll see how it continues to play. I think this is going to continue to trend in this direction eventually. It's definitely taken a while to do it. You can see we've been in this same kind of choppy region for about a month. So price action basically flat for a month, and now we're going to see what happens as this continues to step towards that bearish direction, in my opinion. Moving over to seasonality, during this seasonal period, we are supposed to be relatively bearish. You can see the 21st is right here. We did get a little bit of choppiness through here, so that seemed to have played out fairly well. But now that choppiness is supposed to be trending lower here all the way up until the 25th. Or the 19th trading day, which is basically all week, slightly bearish conditions. During non-election years, it's basically flat here up until the 25th and then bullish out of there. We'll see if that continues to be true. Really, it seems more like we're following this non-election year chart, but certainly a possibility we do see this kind of sell-off here, which is about a 2% move based on seasonality. Moving over to the calendar, you can see relatively choppy action. Monday, not much. Tuesday, a little bit bearish. And then for Wednesday and Thursday, you can see relatively bullish, and then the Friday is bearish, so doesn't really fit super well with the election year charts. And then for things on the calendar, you do get beige book, semiconductor billings, that'll be interesting, new home sales, durable goods, and then Michigan consumer sentiment. Otherwise, not a super eventful week. Moving over to the earnings calendar, you can see really not much here for the Monday. Looking at Tuesday, GE Aerospace, Philip Morris, Verizon, Texas Instruments. Really want to see what Texas Instruments is putting out. Sherwin-Williams, 3M, definitely an interesting one. For Wednesday, we start to get into the heavy hitters. You have Tesla, Coca-Cola, T-Mobile, IBM, always fun to watch, AT&T, Boeing. They've been under some pressure. Want to see what they're doing. For Thursday, not a whole lot. Union Pacific, Honeywell, SP Global, UPS, definitely want to see them. They're kind of a bellwether for markets. And then to wrap it up for the week, Colgate-Palmolive and HCA. Moving over to Max Pain, we can see Max Pain for the Friday is at $578. It's only about $6 lower from current price. Total options, not very many, 480,000. Put call ratio, 2.77. Really not a lot going on with this options week. Last week was third week options expiration, and this week really should have pretty little impact on markets. And then looking at the day-to-day numbers, you can see slightly lower than current price all week. And then for your 7 days out, it is quite a bit lower, 1.68%. You can see that 575 number. This hasn't seemed to matter yet. I do think it will matter eventually. So slightly bearish conditions all week. Moving over to the charts, looking at the S&Ps, you can see on the SPX, we did finally hit that upper trend. We didn't overthrow it by much. We pretty much just touched it. For next week, that trend is going to be a little bit higher at 58.93. And you can see in the last time we touched it, we overthrew it a little bit, 2 weeks in a row, and then we got the down move. We are back to that level, waiting to see if we get the same kind of rejection. Momentum bullish, RSI still technically bullish above the SMA, but still much, much lower strength than this previous peak back here. This was in 78, almost a 79. Current strength is a 69, so much higher prices, much lower strength. Doesn't mean we can't continue higher if it breaks out. Who knows what's going to happen? Right now, we've been in this structure for a pretty long time, depending on how you look at it. Arguably here, December of 23, choppy action. But even if you pull these back, they definitely were some key levels back here all the way to June and July of 22. So definitely impressive that this price channel has been important for so long, but it continues to be relevant here, and I do think this is a key resistance area. Then moving over to the daily chart, I did add some new levels. Current support is 579.78. And then I added one here at the open from the Thursday session. That was 585.91. That continues to be resistance. Couldn't quite touch it there on the Friday session. If it breaks out, back into price discovery. I do have some trend lines here, which are a little bit different. That's up around that 601, 602 area. That trend line goes back to this structure here and then extends out beyond it. Again, could be a potential price target. It's important to have those short and medium term trend lines. Obviously, those other ones were medium to long term. So we're right now in that zone. But in the short term, you could argue for a price up in that 600 area. I don't know if it's going to go right now. Momentum's basically neutral. RSI basically neutral. As last week was basically sideways action the entire week. Moving over to the Tasty charts here on the weekly, you can see we did get just barely above that second ATR band. That's at 581.60. Closed just barely above it at 584.82. If we do push to that upper band, that would be 597. Should be a pretty substantial move from here, about $13 of potential upside. That's a 2.5% move or so. ATR bands, ATR trailing stop continues to roll up here. That's at 540.24. So based on that moving ATR trailing stop, you're expecting this to continue to go higher, in my opinion. Usually you get a bit of a rally here, sideways choppy action, and now we're back into this rally style move. Again, that would give you a price target there. You can see last time we touched it, that was the end of the rally, and then we got the pullback. Sometimes you can overthrow it depending on how aggressive that move is. Not super common. More often than not, you rally to it, get the rejection, and then move lower, and then rally back to it. Same thing here. If we rally to it, I do expect that to be the culmination of this move. Moving over to the daily chart, you can see we're stuck between this 8 EMA and that upper ATR band, which is at 588.46. We haven't really been able to touch it over these last 5 days, which again is a little bit of a sign of weakness, especially being in such close proximity. We nearly got there on the 14th, pulled back, slight up day, pulled back again, slight up day. So really trying to grind. You can see the ATR bands are starting to contract a little bit. ATR trailing stop right now, 569.04. Momentum swinging to bullish. Did get a little bit of volume on that selling day, which is what we're watching. We have not closed really above the top of that candle. We did get very close on the Friday, but still didn't do it quite. But either way, grinding price action, mostly sideways. Moving over to the NASDAQ here on the weekly chart, you can see we did hit that trend line. Again, I did adjust it very slightly so that it marked this top from the previous week. We got another touch of that trend line here at 20,472. And now for next week, it's going to be up around 20,612, grinding along that level. Momentum basically flat, RSI basically flat. So still grinding along that trend line. We've been doing that for multiple weeks in a row at this point. And we are just off of your all-time high. Your all-time high is at 20,690. So if we did hit that trend line, we'd probably end up overthrowing it to the all-time high on the VIX. So in striking range of that area, once again, these are some very long-term trend lines. You can see this one goes back to April of this year, but these longer-term charts here where we found support, this one goes all the way back a long, long ways. So that's an important trend line, continues to hold as support as we push closer to that all-time high once again. And then looking at that daily chart, you can see we're just barely above that trend line, gapped above it, ended up doji on the day, still above 492, so that's bullish, holding the 9 EMA as well in there at 492.60. As long as that holds, we might see a resumption up to 498.44, and then that would be your most recent high. If it breaks out from there, then we're probably headed to the all-time high, which is 503.52. Again, the structure still looks bullish, but we're finding some resistance after the touch on the Monday, and then a strong pullback on the Tuesday before we got sideways choppy action over the next couple days. So again, rally up, pullback, held support. Generally assume that's going to at least double top at the level. If it breaks out, obviously that gets you the next level at 503.52. And then moving over here to the Tasty charts, you can see we are still below that most recent high. Momentum still bearish. ATR trailing stops still flat here all the way since that 1 July candle. Sideways choppy pullback. We're still in the same region. If we start to overthrow and get up to that second ATR band, that would be 513.08. That would bring you to a new all-time high. Then I would expect these ATR trailing stops to start to trend up a little bit. Weekly chart, again, ATR band still very much in a bullish structure. And at this point, I would expect it to at least hold, if not continue to grind slightly higher until we see the SPY hit that upper ATR band, which it's very, very close to. So slightly bullish here, still holding that 8 EMA at 484.04. And then looking at the daily chart, it just does not look nearly as strong. You can see the strong push, held the higher low, rallied up, and this rally was definitely weaker than the previous. And then the most recent ones, shallow dip, shallow rally, sideways action. Again, you can see those ATR bands contract, still moving towards the center, waiting for that clear direction. This is sideways action, still holding that 8 EMA. That is right now at 491.79. As long as that continues to hold like it did here, then we're in good shape. But you can see here, once it breaks down, usually you get a pretty solid follow through. Same thing here. Got to it, pulled back. Not a huge follow through there, but can be interesting. Big move here, big follow through, big move here, big follow through. And especially with this most recent rally not being so strong, it would be interesting to see what happens once this breaks. ATR trailing stop at 477.61. Moving over to the Russell, you can see we are still very much in this uptrend. We continue to break these most recent highs. Everything continues to look quite good on the Russell. I've been a fan of it for a while. Momentum flipping back to bullish, RSI back to bullish. And with this week, it was nearly 2% up. Definitely better than the NASDAQ and the SPY. Clean breakout here. Still looking for a test of this trend line up here around 231.50. Everything continues to look good there. 231.50 would bring you right to the tops of this consolidation here. March of 21, June of 21. The all-time high is up here in the 244 area. I don't know if we're going to get there soon, but I do think that this trend here is within range. Just another $6 higher, and I do think we're going to get there potentially this week, if not next week. And then looking at the daily chart, it does look a little bit weaker here on the daily with the break of that level 226.02. Closed below it, momentum stepping to bearish. Wouldn't shock me to see a pullback to this trend line here. Would really like to see that hold at 223.92. 9 EMA sitting down there, 222.02. Maybe you get a little bit more pullback before we see the continuation up to that trend here. Again, not super great on the daily chart. Weekly chart still looks very good. Moving over to the Tasty charts here on the Russell, you can see we did get a nice step up on the ATR trailing stop. That's at 197.07, pushing towards that second ATR band, again 231.05, right in line with that trend line that we talked about, just a couple of cents below it. Momentum slightly bearish. This doesn't always have a good inclination. It is the volume weighted MACD, so it kind of lets you know that volume is not going with the move right now. Eventually that tends to matter, but in the short term, not super relevant. And then if we do get the breakout and hit this upper trend, that's all the way up at 240.27. That's very, very close to the all-time highs. I do think this is going to go. It's looked very, very good here recently, and it continues to do so. And then looking at that daily chart, ATR trailing stops still trending up, 215.60. ATR bands pulling back, found resistance at that second band, 226.51. Not super great to see that. Again, 8 EMA would like to see that hold, 223.37. Could pull back, higher low setup, and then continuation up. But understand the daily chart is showing just a little bit of weakness, 2 days in a row of bearishness. Moving over to the Dow, you can see it's still very much in this uptrend. Definitely pretty extended now off that 21 EMA, about 7% higher from that level. That's about as high as it gets. You can see back here, we were right in there, 8, almost 9% extended before we saw sideways consolidation, a little bit of grinding price action, allowed that 21 to catch up a little bit. We're definitely in that vicinity, definitely at all-time highs, another strong week, 0.95. Not as strong as the Russell, but still better than the SPY or the NASDAQ. And then looking at that daily chart, you can see just continuing to grind here, gapped up to the trend, sideways action, 0.08 to the upside, momentum bullish. RSI kind of flat in here, definitely close to overbought conditions. As long as this continues to hold at the trend line, it's probably in good shape. Eventually this will pull back, probably down to that next support here, 426. It's about 1.75%, almost 2% lower. So I think this will pull back, hold the higher low, and then we'll see if it pushes back up to this trend line. Right now, still looking pretty good along that edge. Moving over to the equal weighted S&Ps, this just continues to march straight up here, really since 8 July, just charging up higher every single week, just about. Had 2 down weeks, really. Since then, everything has been very strong. Momentum bullish, overbought conditions, 70.32 on that. And you can see we broke this trend line here, pushing towards that next trend line up here. That gives you a price target all the way up at 185 or so, maybe slightly below it. But that's another strong push potential. Everything just looks super good here. This is really what's holding up markets, in my opinion. I don't think big tech is leading us higher. It's the rest of the markets starting to make some gains. while the Mag 7's basically hovering flat. And just to give you some levels, I did add a level at the all-time high. 182.22 was the high of the week, and then my previous support is down here, 179.94. Again, a little bit extended, just like we talked about on the Dow. Above that 21 EMA, we did get about 6.5% higher. Right now, it's about 6.4. That's pretty extended, especially for the equal weights. This is not a super volatile stock. You can see back here, let's see, how extended were we here? That was about 7, really 8%, 8.5%, somewhere in there before we saw consolidation. Did get the continuation up from there. So we've been this extended before. Is it going to continue to do it? Right now, everything still looks super bullish. Moving over to the ratios, as we thought, we did get a lot of Russell outperformance. You can see that big down candle after the rejection that we got 2 weeks ago. Broke the trend, broke the level. I think the Russell is going to continue to do so. 55 is your next support at 253. Right now we're at 258. Should see this continue to go here. And then similarly, NASDAQ was the worst performer. NASDAQ continuing to trend lower towards that 343 level. So we got the test of the trend, rejected from there, consolidation, breakdown. NASDAQ, not super great. Everything else seems to be doing okay. Russell is still the best, as we thought we were going to get last week. And hopefully that continues here. I do think it will based on everything we're seeing here. Moving over to the SPX divided by the M2 money supply, we did see that strong breakout 2 weeks ago. We did get the continuation that we expected, 0.85 on this chart. Momentum still bullish. RSI, it is trending higher, but still looking at this as a clear divergence. RSI continuing to go lower as price continues to go higher. Your resistance is not till 28.50, so that does give you a little bit more upside potential here. New all-time high, new relative high. Remember, the all-time high is back here during the dot-com bubble. 1997 up until really the 2000. Up until 2000, we had that top, and then we did have this very strong rejection. Seems to be what we're seeing right now. Very strong movement up. Next level, 28.50. Continues to look pretty good here, at least in terms of price action, despite that divergence. Moving over to the Mag 7, it was very slightly positive, 0.13 to the upside. Still in the same consolidation range we got here, 16 September week, and we are basically flat during that time. 1 month of sideways price action. Seems to be rolling to the downside. Something to consider there on the Mag 7. Support is still 273.41. Got very close to that. The low of the week was 273.67, so missed it by about 20 cents. Momentum rolling down. RSI just barely above the SMA, but still trending lower. I do think this is going to break down, and then we'll see how markets react once these market leaders start to roll over at least a little bit. Moving over to Apple, we did have a very strong week. We talked about the breakout here and at the level when it happened, and we did get a little bit of continuation up to 235. Touched the all-time high just barely and then rejected from there. Momentum swinging, RSI swinging. I think Apple's going to have some good price discovery this week. Obviously, you have to wait for their breakout. Could be another 1% higher to retest. And then once that happens, I think there's going to be some continuation here on Apple. So Apple looking very, very good going into next week. Still like it. And then looking at Microsoft, basically the inverse. I think this is a downtrend forming here. Still got the 55 on the weekly as support at 403.12, but we're below the 21, below the 9, below VWAP. Still in this kind of wedge pattern, but I still think that's going to break at least to the 55, back to these previous lows around 401.88, somewhere in that area. And then if that breaks, 394 is the next level. So watching this closely, still has not broken this trend line here, and the level at 413.36, multiple tests at that level, still hasn't done it. I still think this is distribution, so you can see consolidation, fake out, breakout, consolidation. Eventually this will break down, it just hasn't done it quite yet. Moving over to Tesla and NVIDIA. Tesla had basically a no change week, 1.33% to the upside after a very big down week. They had their Tesla event. People didn't like it so much. We still are holding that 21 EMA. That's at 217.13. My level here is 214 right there, just below the 21 EMA, 217.13. So right in there, waiting to see if this holds or not. Momentum still bearish, RSI still bearish, still holding some support as a potential higher low. Clear double top here though. I think markets are probably going to take this one lower. And then NVIDIA retested its all-time high. You like to see that. That's all the way back from 17 June. Hit the level 140.76. High of the week was 140.89, so just barely eclipsed it. We can see if we can get that continuation up to the trend here around 144.22, momentum back to bullish, RSI back to bullish. Everything continues to look pretty good here. We had the pullback, super deep cut, higher low setup, continuation higher. Everything looks good. Even with this trend line here as a little bit of resistance, still looks pretty good to the upside. Moving over to Amazon and Google. Amazon hanging in there, 0.09 to the upside, still at the level 188.61, closed just barely above it. 2 weeks ago, held that level, still watching this as a high, lower high, waiting to see if this is another lower high. Then I went ahead and added this trend line here, marks this clear bottom, clear test. You could argue this is wedge, very similar to Microsoft, still in the same region, no change to that idea. Momentum is bullish, RSI looks okay. Looking for a test of this trend here at 192.23. Which is about $4 higher. And then looking at Alphabet, continues to hold this trend line, very critical trend line. This 21 EMA is continuing to act as resistance. This is one of my favorite setups. I've said it many times. And this looks like another iteration of that. We've broken down, clear break of the 21, held support, rallying up, 21 EMA rolling down as resistance. If this starts to roll down and price starts to roll down with it, I think Alphabet's going to have a bigger breakdown. We've been kind of choppy. My thesis has kind of been oscillating here. This kind of looks like an inverse head and shoulders, but that 21 EMA setup also could be potentially taking this lower. And then if it does go, 55 EMA is support again there at 155.87, which in terms of price is about 5.5% lower. If that area breaks, then you're looking for the next support, which is all the way down here around 9% lower. Key area still continues to hold. We've been here for basically 4 weeks, 5 weeks really. Now we're going to see if we can get some clear direction. Really, we don't have it quite yet. Moving over to staples and discretionaries, we got staples rallying up a little bit, 0.73, but doesn't look super great on the candle. Tested that 82.53 level, rejected from there. Did break the trend line, so that's good. Momentum bearish, not so good. Waiting to see if this gets any kind of continuation back above 82.53. But right now, this looks a little bit risk off with staples doing pretty well. Discretionaries did okay too, 1.49%, got back above the level 197.14. Once that broke, you had a little bit of rally up to that 200.53 level. Didn't quite get there, 199.51. Momentum basically flat, RSI still hovering. Again, this still looks like a consolidation top to me. Kind of like we saw here before we had a little bit of a breakdown here on the 30 September week. For me, discretionaries, consolidation, probably going to reject from the same area. But if it does break, your trend is up here around 203.43, waiting to see if you get the continuation to that level or if this is consolidation, lower high setup, and then a breakdown back to that 9 EMA area, which right now is 193.52. It'll probably trend a little bit higher, 194.50, somewhere in there. Moving over to oil and semis. These have been pretty interesting here recently. Oil not looking super good on the week. Talked about this being potentially possible after the break 2 weeks ago. Broke my level, so based on my rules, that means we're going to the next one here. Sure enough, we did 135.07, held that level for a little bit, and then broke it right at the end of the week. Momentum slightly bearish. I still think this might hold a higher low. If you look at it on the daily chart, it does actually look a little bit better holding this zone here. 21 EMA as resistance at 135.71. So still mixed signals, could be holding here. Maybe it swings up or not. But based on the weekly, you would expect a little bit of continuation off that big down week. Still very much a medium-term downtrend, waiting to see if we get the higher low setup or not. And then looking at semis, this is more interesting here for me. Semis do play a huge role in markets. Oil and gas is really more of a trading vehicle for me. Semis tried to break out, broke the level technically on a closing basis 2 weeks ago, tried to go a little bit higher and then rejected. We've been talking about that thesis where markets have tried to show bullishness, and every time we get a breakout to the upside, it's very quickly rejected. And this is another iteration of that on the weekly chart. Momentum kind of flat, RSI kind of flat. The volume was not great on that selling candle. So this kind of seems like we're losing momentum to the upside and that it's going to pull back a little bit more. And if semis start to show more weakness, I do think that markets will go with it at least a little bit. Semis have been driving markets higher, and it's been a pretty strong run really since the beginning of September. But now we got a down week. We're going to see if it has any more to the downside. Current support for me is down at the trend, 242.18 or so. Moving over to wood and gold, you can see gold had the clean breakout above this consolidation, hit my target 250. We said it was going to get there a long time ago. Sure enough, it has. Trend resistance up at 253.50, didn't quite get there. For next week, it's going to be 255.50 or so. momentum bullish, still super overbought. Gold has been on a massive run and it seems to continue to go here. And then wood, this is a little bit more interesting again with the breakout retest. Now we're waiting to see if this retest is going to hold. If it does, then we could start to see this kind of swing back to the upside. It's been a super long bull flag 3 weeks in a row. After the clean breakout here, strong push, bull flag, retest support. Need to see that continue higher, and I do think this is where it's going to do it, if it will. If not, it's going to break down from here and then push significantly lower in my opinion. So critical zone here on wood. This is a big indicator for me where the economy is going, and I do think it's going to hold here. And if it does, that should give markets a little bit of bullishness. Moving over to RIOT and Mara, both of these had great weeks, 17.24 and 17.41. Big volume, big momentum swinging here. Broke the level, really should have taken this trade at the level. I think Mara is going to go quite a bit higher, 200 there at 20.08. Think we're going to get the continuation. This looks like a clear consolidation now with a low, higher low setup, continuation higher, clean breakout. Similarly here on RIOT, broke the level, 878, pushed another dollar, 144 sitting there at 1014. Everything on both of these looks pretty good going into next week. I like Mara a little bit better because it's less of a downtrend. RIOT is a little bit more of that medium-term downtrend. It's really been making lower lows and lower highs for a while. If that is going to continue, you would expect resistance around here at that 144, maybe the 55 just above it at 1081. But that's a strong candle. It's been swinging up pretty aggressively. Volume coming in on the rally. I think there's some more in both of these really, but I like the Mara setup a little bit better. Moving over to 20 and 50-day breadth, neither of these really made any gains. 20-day was slightly positive back into this consolidation, hasn't pushed into those super aggressively overbought yet, up around that 86 to 98 area, still in the same level. Did break the level here, 68.14, so that was slightly bullish, but looking at the 50-day, really not the same. It was up slightly, still finding rejection at the level, 77.46, rejection, the same consolidation highs. Momentum continues to fade here. RSI just above the SMA barely, but honestly, those are on top of each other. It is trending up right now, so we'll see if that continues to matter. But again, seems like a long-term topping pattern. Now you're starting to get that lower high setup. If we get a pullback from there and this continues to kind of slow and then fade, that's not going to be a good indicator. But for right now, it's still holding relatively flat. Moving over to 200-day breadth, 200 actually looks a little bit better. We broke the level here 2 weeks ago, held the level 76.04, did a slight continuation. It's really at these consolidation highs, hasn't really broke above that. This consolidation high goes all the way back to 25 March. That was up around the 82 area. Seems like we could be headed back there. It's not super often you get this high on 200-day. But we have been here for a long time. We got here all the way back in December. We've been in this region for a long time. Breadth has dipped very slightly into the 60s just for moments and then continued back up. So again, kind of weird to see it hover this long. I guess you could say it maybe did it here, but even that, the dip lows were back into the 50s. But this is a long time as well. April of 16 until we did get that bigger dip in October of 16, and then back here February of 17 up until about January of 18. So that was about a year. I guess it can do it for a while, but honestly, we haven't seen it do that in a while. But here we are in the same consolidation high. If it's going to roll down, it's probably going to do it here. If we get the continuation up, 91.42 is the next level. Moving over to the dollar here on the weekly chart, we're still seeing this big swing to bullishness, big step to bullish on momentum, hit that 144 and 55 EMA there at 103.88. Definitely an interesting zone there, got the touch. Now we're going to see if it finds a little bit of rejection from there. My guess at this point is that it won't. We've had a really strong push. It seems to want to continue. Got the trend break, tested my 103.64 level. Now we'll see if it's going to push through here and then up to that 104 area. And then behind that, you do have this kind of longer term downtrend that we've been watching. That's all the way up at 105.28. If this continues to look strong, equities will start to turn more bearish. If it rejects from here, maybe that gives equities a little bit of strength, at least in the short term. So critical zone, it's been a really powerful push. I think there's potentially more in it, whether it comes now or if it pulls back to a higher low and then gets the continuation. Moving over to bonds. Bonds did find a little bit of bullishness, 0.31 and 0.18 to the upside. J&K really looks a little bit better. Gap down, big wick, to support, gap up, rally, looking for a push back up to 97.69 and the 200 there at 98.15. I do think we're going to get a touch of that before we see any kind of change in structure. At this point, you do have a little bit of a pullback below the 9, which is concerning, but otherwise still looks good. And then looking at TLT here, 4 weeks in a row of bearishness. Now we got a finally bullish week off of that 55 EMA at 93.32. It did retest this trend here. I do want to see it get back above that, push to 96.50. But right now, this looks like a breakdown retest. If we do get the break back down, 92.82 is the support. We didn't quite touch it yet. Momentum's bearish. RSI is still bearish. And finally, here we have the VIX. The VIX is still at that 9 EMA. That was 1784. The low of the week was 1799. So we just barely missed it. Still holding that area. Trend support is right here around 1791. Didn't get to there either. Momentum bearish, RSI bearish. We'll see if it holds this area or not. We've kind of seen this before where it kind of trickles down to the SMA and then get a bounce, trickles down again, get a bounce. So far it's held up. We'll see if it does it again here. If it breaks down, maybe we do get another push on equities. Maybe we see something like this where it overthrows very strongly and then we get 3 weeks in a row of bullishness on the VIX, which is not great for equities. But right now, still holding this kind of structure, higher lows each time, lower highs each time, waiting to see a clear direction. Moving over to my account, I managed to make like $200 on the week, which was fine, I guess. It was pretty much in line with markets. Very, very similar in terms of movement. Either way, it's not bad to make just a little bit of money on the week. In terms of positions, you can see still holding 224 for the Tuesday session, still in the money, still making some money on it, still have plenty of room if it does decide to rally. I do want to be a little bit cautious. Like I said, that daily chart doesn't look super great, but I still like it on the medium to long term. And then the Qs here, still holding that 493 for Monday, $2.50 gives me a max profit of 495.50, so about $1 higher from current price. We're in that sideways consolidation. I think it could really go either direction, and I did want to be a little bit more protected than not. So very slightly bullish going into the Monday, but clearly watching those areas of resistance that we just can't seem to break. Let me know down in the comment section what you think of the retail data. Is this another encouragement to continue to invest, or is this another piece of fake news similar to the jobs reports? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.